All right, I want to have a little conversation about nominal and notional rates when it comes to futures. Primarily, again, we trade financials, the U.S. stock market financials and interest rates here at mistrade.info, along with some grains, primarily wheat, beans, corn, oil, natural gas, and then the metals, gold, silver, platinum sometimes. These are the primary vehicles that I trade with. When you become a member, we will give you the entire list that the exchanges provide of all the futures that trade, what their notionals are, what the per tick, per contract payment is on the leverage. But you need to understand, and I've got up right up front here, a list of the primary vehicles. The S&P market, when you buy one E-mini contract, you're buying 1/5 of a big contract. So 5 E-minis equals one big. And this kind of goes the same with the NASDAQ. 5 E-mini NASDAQ contracts equals one big. 5 E-mini Dow equals one big. So when you trade 1/5 of one big contract, or one contract at a time, you're controlling 1/5 of a percentage of the entire S&P 500. So for you to go out and buy every stock and add that stock into your add every stock into a portfolio would cost you literally hundreds of thousands of dollars. So the pits and the exchanges created a product, a number of products that allow you to have great leverage and be in participation in these markets. So understanding that one contract in the ES, every point that it moves is 1/5 of a big contract. Every point on it doesn't cost you much because due to the leverage and the margins available with these products. Now that's a two-sided coin in that both the upside and the downside can be significantly large. So you need to understand that when you get into the futures marketplace, there's a lot of leverage involved in the marketplace. That being said, it's probably also the most friendly trading vehicle out there in the world. So if you want to become a trader, I always tell people you shouldn't start with stocks because there isn't the liquidity and the transparency that you have in the futures marketplace. So that's why we play in the futures marketplace, because there is high leverage, but with that high leverage, you have great liquidity and great transparency. The markets are open pretty much 24/7 across the board, especially when you're looking at the financials. The E-mini, S&P, the NASDAQ, the Dow, and the Russell are all pretty much open but 15 minutes every day. So they close at 1:15 here on the West Coast until 1:30, and then they're reopened. They close Friday at 1:15 and then reopen Sunday at 3 o'clock. These, again, are all Pacific Coast hours. So that gives you a lot of time to participate in the markets. Now, when people ask, why do you trade sometimes the NASDAQ versus the S&P, and I want to give a real simple example here of why. So we're controlling, again, a piece of an indices when we trade, or an index when we trade, and having one E-mini, for example, I've pulled up the E-mini charts as we trade here currently live in the middle of a late session. 1459 is, so if you had one contract, each point on the E-mini is worth $50. So if you bought one contract at 1459 here, and you thought we were going to go higher, and it went to 1460 and you sold it, that would be a 1-point move. Each point is worth $50 per contract. So you'd make $50 on that trade. Let's assume commissions are somewhere in the $250 range. In and out round trip, that trade might have cost you $5, so you netted $45 at the end of the day. Now, why would I use the NASDAQ? Because the same percentage move in the NASDAQ gets a little bit wider, and you can see this even using this week's charts. This week on Wednesday, we opened up at 2686. We went as high as 2747, which is around 61 points, or just shy of 2.5–3%. That's the range that we've been trading in when you look at the NASDAQ all this week, and that's 2.5%. Whereas the S&P, the total range, just to point out, where we open Wednesday 1438 to 1460 is 22 points, or less than 2%. So the range, the trading range in the NASDAQ this week has been wider than that of the S&P. And I will look at things like range, especially when you look at if what I'm trying to do is take the biggest bite I can out of a marketplace when I'm participating. So if I want to take a 0.5% or 1%, I have a better chance of doing that in the NASDAQ this week due to the expansiveness versus that of the S&P. So that's one reason we'll do that. And another quick example that I'll use to show that is if I'm playing in the grain marketplaces, because a lot of these things tend to move, especially the U.S. indices, they tend to move together. So the NASDAQ, the S&P, the Dow, they all really move in the same manner of speak. So they're all going up and down kind of in that same percentage range. So I want to find the broadest vehicle to play in the respective industries that I'm playing in, the ones that have the most expanse, most price change, most time in moving around. Those are the things that we look for as traders, and is those opportunities. So if we were looking at corn, wheat, and the beans this week, just to give an example, real quick, corn this week has been anywhere from $7.07 a bushel to $6.80. So you're talking about a 27-cent move, which is pretty large. That's a large move on corn. That's moved almost 4%. This is unusual. So that's a big move that we saw in corn. But the notional, as far as one contract on corn, is worth 50 cents per contract per penny. So if we went from 707 to 680, that's again 27 cents. Each contract that you had in that move, opportunity is 27 cents times 50 per contract is what you can make or lose as you're trading that. The same thing is true in this circumstance with beans. Beans happen to be the same. They're the same, 50 cents per cent move. Now, we said corn moved big, 707 to 680, but the beans have moved even larger, 1435 to 1356. So you're talking a 79-point move, or almost 5.5% range. So where would we want to play? We'd want to place our opportunities where the market is moving more. And right now, beans are wider and more expansive than corn or wheat. So we tend to focus on the areas where we have more opportunity to make money. So if we looked at those two instances this week, the NASDAQ is better opportunity as a trader versus the S&P. It doesn't mean we don't fluctuate and trade one versus the other. It changes, and this is something that you have to be aware of, and we help guide you through here at our service. So again, beans over corn this week, beans over wheat this week, that changes, but these are the types of nuances that you need to look at when you're breaking down markets and finding the best items to trade.